You can be able to hear me. Please confirm in the chat box. Please confirm if I'm audible enough. Thank you so much, Fred, Emmanuel, Mercy. And I take this opportunity to welcome you for this session on the taxation of wholesalers, retailers, and also distributors. So before we begin, and respecting all religion, we're going to start with a word of prayer so that we commit this session unto the Lord. So let us pray. Heavenly Father, King of glory, we come unto you, Father, this morning. We thank you so much, Father, for this moment that are given unto us, Lord. We commit this session, Lord, unto you. We pray that, Father, may be with us as we begin, even as we end. In Jesus' name we pray and believe. Amen. So you can say an amen in the chat box so that I know that we are together. Okay, thank you. Thank you. So without taking more time, we're going to start. The rest of the people will join us on the way. So I hope that today's session will be interactive and that you're going to get to learn a lot from what we have prepared for you today. And in case of any question, just read them on the chat box and my team will respond, and I'll also be able to respond to some few questions at the end of the session. So because of the network interruptions, I'm going to stop sharing my video so that now we can go to the slides. Please confirm if you can see my slide. Okay, thank you. So my name is Charity Idibu. I'm part of the RWK and Associates in the tax department. So today's topic is very interesting, and basically we are majoring on the tax implication in the wholesale, retail, and distribution businesses, which is very important for us to understand in the industry that we are in. What are those tax implications? How are we supposed to be tax compliant so that we avoid the issues of having cases with KRA? So we're going to start with a quote from Benjamin Franklin. And basically, it's all about tax certainty. And I believe this statement is correct, that in this world, nothing is certain but death and taxes. So the content of today's training, we're going to talk about the types of taxes, particularly in the wholesale, retail, and the distribution businesses. We're also going to look at the electronic tax invoice management system, also known as the ETIMS. We're also going to look at the filing using the auto-populated sheets. That is when you're filing our VAT. We're going to look at the tax compliance. How are we supposed to be tax compliant? Then also, we're going to look at some of the tax planning strategies, which is also very important when you are running our day-to-day activities in our businesses. Then also, we are going to look at the tax audits and the tax amnesty, although it's no longer there because it expired on that June 2024. I don't know whether they are going to extend. They were to extend using the finance bill for 2024. So the types of taxes that we are going to look at is the corporation tax, the pay-as-you-earn, the VAT, the withholding VAT, excise tax, rental income tax, capital gain tax. We're also going to look at some of the statutories, that is the NSSF and NHIF, and the housing levy. So for all these types of taxes, we need to be compliant. So it's very important for us to understand when you talk about corporation tax, what do you mean? What are the rate of taxes that are involved, and what is your duty as an accountant within an organization or as an entrepreneur? So we're going to start with the corporation tax. In case of any problem or any network interruption, just let me know in the chat box. Also, raise as many questions as possible in the chat box. We're going to ensure that we respond to all of them. So let us look at the corporation tax. And corporation tax, it's levied on the profits of businesses. So when you open a wholesale or a retail or even a distribution business, your aim is to get profit. So on the other hand, for you to be tax compliant, the government will tax that profit that you are getting. So when you get a profit as a resident company, if you have a wholesale, then if you get a profit of like $1 million, you are supposed to be compliant and pay the 30% corporation tax. Also, we are going to look at some of the tax saving strategies so as to reduce our tax liability, because when you check the Income Tax Act, it normally highlights what are some of the allowable expenses that you can be able to deduct when the auditor is computing your corporation tax at the end of the year. So the resident companies, they are taxed at the rate of 30%. So 30% of the profit that you get in your business, it's going to be subjected to tax. Then the annual tax return, it must be done by the end of the 6 months. So for example, if your company year end is 31st December, so it means that for the year 2023, you operated from January to December. So after December, you are given 6 months for you to ensure that you file your annual tax returns. So meaning that you are supposed to file your returns by 30th June 2024, which just ended like 2 weeks ago. So if you have not done that, then we are going to see what are the repercussions for the same. Then also, you're supposed to pay installment taxes. And these installment taxes, they are paid on a quarterly basis. So KRA expects that if you are going to have a profit, so for example, if you just started your business in January 2024, then it means that you have some plan. So there's a profit that you are anticipating to get to generate for this particular year. So using that estimate that you have done, you need to divide the taxes that you anticipate to pay at the end of the year. You divide by 4. So if you started your business in 1st January 2024, and you anticipate that by the end of 2024, you're going to have a profit of 1 million. So the taxes that you anticipate to pay is 30%. The corporation tax, it's 30% of the 1 million, which is roughly 300,000. So KRA wants you to pay that 300,000 in advance. So you need to divide that 300, you divide by 4. So by the 4th month, that is by 20th April, you are supposed to pay the first installment. Then by 20th June, you are supposed to pay the second installment. So the first and the second installment, they are already due and they are past. So the third installment, you're supposed to pay by 20th of September. And the fourth installment, you're supposed to pay by 20th of December. So if last year you have been operating for quite some time, and last year you made a loss, then based on the projections that you are doing for this particular year, if you anticipate to have a profit, then that profit will be the basis for you to pay the installment tax. But if you had a profit last year, KRA expects that that profit will increase by 10%. So if you had a profit of 1 million and you paid taxes of 300,000, they expect that come this year, that profit will increase by 10%. So it means that your estimated profit will be 1.1 million, an increase of 10%. So using the 1.1 million is what you are going to subject that amount to the installment tax. So failure to file your corporation tax, or you do a late filing, if you didn't do your filing by 30th June, then it will attract a penalty of 5% of the tax due, or 20,000, whichever is higher. So if you had a tax due of 1 million or 2 million, then when we calculate the penalty is like 100,000, so the penalty will be the higher of the 100,000 and the 20. So it means that you'll pay a penalty of 100,000. Then also the late payment. So when you file your return, you filed your return by 30th June 2024, but you didn't make any payment. So far you haven't done the payment that you were supposed to do. Then it means that the late payment will incur 20% penalty and an interest of 1% per month on the unpaid taxes. So in case of any query on the corporation tax, just raise it on the chat box. Also, in case you are unable to file your corporation tax return for last year, possibly you can just reach out to us. We can be able to assist on that. So we look at another type of tax, which is the pay as you earn. And basically, this is part of the employment income. And this is a mandatory tax levied on all employees on a monthly basis on their salaries. So for the pay as you earn return filing, it's done on a monthly basis as compared to the corporation tax. So the corporation tax is for the company and it is done once a year. But for the pay as you earn, it's for the taxes that you deduct your employees, and you file the return on a monthly basis. And the deadline is normally 9th of the following month. So by 9th of every month, you're supposed to ensure that you file the pay as you earn return. If you fail to do that, then there's going to be a penalty of 10,000. So the obligation to deduct and remit is on the employer. So the employer basically, they act as an agent to ensure that they compute the pay as you earn and they deduct that money from the employee and ensure also that they remit that money to the KRA. So pay as you earn is normally taxed on a graduated scale, whereby the minimum is 24,000. So it means that if you are earning 30,000, the first 24,000 will be taxed at a rate of 10%. So the first 24,000 will be taxed at a rate of 10%. Then when you check in the Income Tax Act, you can be able to see those graduated rates, because they vary from 10%, 15, 20, 25. We go all the way up to 35%. So we have said that failure to file the pay as you earn return, it attracts a penalty of 10,000. But also failure to file and pay the pay as you earn return, there's a penalty of 10,000 or 25% of the tax due, whichever is higher. So we have seen that it needs to be filed by 9th of the following month. So ensure that you are compliant to avoid the penalties and the interest that might be imposed on your PIN. Then, as an individual, all the individuals, or rather all the employees, they are entitled to a personal relief of 2,400 per month. So the 2,400 is basically to reduce their tax burden. So in case of any query on the pay as you earn, please raise it on the chat box. So if you have employees within your organization, do the registration of the pay as you earn obligation. And now it doesn't matter whether they have reached the threshold of 24,000 or not. So because sometimes in your wholesale, maybe you could have like 10 employees and you are paying each of them 20,000. So you say, I don't have to register for the pay obligation since I'm paying my employees an amount that is less the minimum taxable amount, that is the 24,000. You need to register for the pay as you earn just to be tax compliant and also for disclosure purposes, because it will mean that you have the 10 employees, you are paying them 20,000. So on a monthly basis, you are incurring salaries and wages of 200,000, even though there is no pay as you earn tax that you are going to deduct your employees. But once you have the pay as you earn obligation, KRA will be aware that you have a pay, you have employees, you have 10 employees on a monthly basis, and you are paying them a total of 200,000. Because when you multiply the 200 by 12, that is roughly 2.4 million. So you'll be at ease when you are claiming the salaries and wages of the 2.4, since KRA is already aware and and they have all the list of all those employees. So in case you have any permanent employees in the cashiers and they have KRA pins, just ensure that you include them in the pay as you earn when you're filing. Also, in case you have not registered for the pay as you earn obligation, just do so, because this will avoid any tax disputes that might come at the end of the year. So also, just raise questions on the pay as you earn. In case you have any, we'll be able to respond to them. So let us proceed to the value added tax, that is the VAT. And basically, VAT is levied on the value added to goods and services at each stage of production or distribution. So as a wholesaler and also as a retailer and as a distributor, when you exceed the threshold, the 5 million, when you're selling vatable supplies, then you need to register for the VAT obligation. If you have reached that threshold and you have not registered for the VAT obligation, then you are not going to be tax compliant, and hence KRA may come at your doorstep to request for taxes that you have not paid, and also to charge you some penalties, or rather some fines, because of you not registering for the VAT. So the VAT threshold, we normally have two ways. So there's the compulsory registration, whereby you have reached the 5 million threshold, and also there's the voluntary registration, whereby you have not reached the 5 million threshold. You're not selling 5 million sales worth of vatable supplies, but you would like to enjoy or rather claim the purchases that you purchase. You want to claim that VAT. So you can do the registration. So VAT, it has got various rates. We have the standard rate, which is 16%. So currently, in case the rate changes, the KRA always alerts us. So the standard rate currently is 16%. But also, we have some goods and services that are either exempt or zero rated. So the VAT is guided using the VAT Act. So you can use your browser, either Google or Chrome, then you can be able to download the VAT Act. And once you download, in the schedules that are there in the VAT Act, you can be able to know what goods are exempt and what goods are zero rated, and also the services that are exempt and the services that are zero rated. Because any service or any good that is not classified as exempt or zero rated, that good or service is supposed to be charged VAT at a rate, and a standard rate of 16%. So also the filing and the payment of VAT, it has got deadlines, whereby you must file the monthly VAT by 20th of the following month. So each and every month by 20th. So like today we are at 17th July. So by 20th July, that is Saturday, we need to file the VAT for the month of June. So after the end of a month, you're given 20 days to ensure that you gather all the receipts for the previous month, and you ensure that you file and you make payment. So failure to which, late submissions, they normally attract a penalty of 10,000 or 5,000, 5% of the tax due, whichever is higher. Then also late payment, it will incur an interest per month on the unpaid taxes. So also we in the VAT, we have the issue of withholding VAT agents, whereby KRA may appoint you as a VAT withholding agent. So once you are appointed as a VAT withholding agent, you're going to get an acknowledgement it is going to be shared to your registered email. And also, if you can be able to access that acknowledgement receipt on your iTax portal. And that acknowledgement receipt will indicate that you have been appointed as a VAT withholding agent and effective immediately, depending on the date. So if you get an acknowledgement receipt today, indicating that you have been appointed as a VAT withholding agent, then effective immediately, that is when you are supposed to do the withholding. And the VAT, once it means that when you purchase something worth maybe 116,000 inclusive of VAT, then you're supposed to deduct 2% of that amount and remit that amount to KRA. So in the Finance Act 2023, previously, you are supposed to remit and file the VAT withholding by 20th of every month, the same time you are filing your VAT. But things changed in the Finance Act 2023, whereby once you deduct the withholding VAT, you're supposed to file and make payments within 5 days, 5 working days. So in case you have done a payment today and you are a VAT withholding agent, then you are supposed to ensure that you withhold the 2% is required since you are been appointed as a VAT withholding agent. And within 5 days from the date you make the filing, you ensure that you make the payment to KRA. So once you make the payment, then the other party, the person who supplied you with the goods, they'll be able to get a certificate, a VAT withholding certificate on their side. The same case, even to you, when you are selling to a person who is VAT withholding agent, they should show you the acknowledgement receipt. And also, using the iTax portal, you can be able to check the genuinity of that appointment letter, or rather that acknowledgement receipt of them being appointed as VAT withholding agents. Because sometimes we may sell something, we may sell maybe a good worth 1 million, and the withholding was possibly like 80,000. And so they won't pay you the 80,000. They're supposed to remit the 80,000 to KRA on your account. So you are supposed to ensure that you follow up to ensure that that customer has paid the withholding on your account. They have not done any mistakes to your KRA PIN when they are filing. Since if they do any mistakes, you are not going to get the acknowledgement, the withholding certificate on your side. So that is all for the VAT. We also have the excise duty. And basically, excise duty is a tax on specific goods and services, such as alcoholic beverages and tobacco products. And excise duty has got various rates, and they normally varies depending on the product. So, for example, on the alcoholic beverages, they have different rates based on the type and alcohol content. Then also for the excise duty, it has got a deadline for the filing and for the payment, whereby you ensure that if you have the excise duty obligation, you file the return, which is supposed to be done on a monthly basis by 20th of the following month. So also, as the deadline is the same as that one for the VAT, whereby by Saturday of this month, we are supposed to file our excise duty by 20th of this month for the period relating to the period that June 2024. Then also for the excise duty, for each type of tax obligation that we have, there's also some penalties that are imposed in case we are not tax compliant. That is, we are not tax compliant in the filing, and also we are not tax compliant when we are making payments to KRA. So late filing of excise duty, it attracts a penalty of 10,000 or 5% of the tax due, whichever is higher. And also late payment, it has got an interest rate, which is normally charged on a monthly basis on the unpaid tax. Then, as we continue on the types of tax returns that we have, we also have what we call the capital gain tax. I hope we are still together. Please confirm on the chat box that we are still together. Okay, thank you. So we have another type of tax, that is the capital gain tax. And capital gain tax, it's normally abbreviated as CGT, and it is a tax that is levied on transfer of property situated in Kenya, acquired on or before January 2015. So if you want to know more about the capital gain tax, you can interact with the Income Tax Act. It's the one that highlights on how the capital gain tax should be filed and on who is supposed to file the capital gain tax. And it is declared and paid by the transferor of the property. So for example, if today I want to sell a land that I had bought some years back, so if I transfer that land, if I had bought it at 2 million and I'm selling right now at 5 million, then it means that I need to compute based on the sales proceed and also minus the acquisition and the incidental cost that I have incurred on that property. I'm going possibly I'll have a gain. So that gain is what we are saying. We are terming it as a capital gain tax. Capital gain, and it being a capital gain, it's supposed to be subjected to tax at a rate of 15%. So previously, that is periods before 1st January 2023, that is 31st December 2022 going backwards, CGT was charged at a rate of 5%. But currently, effective 1st January 2023, the rate increased to 15%. So it means that when you sell a property, when you transfer a property, you need to compute then the gain that you are going to get is going to be subjected to 15% capital gain tax. And this capital gain tax is a final tax, meaning that income will not be subjected to any further taxation. So, so once you pay the 15% rate of tax, once you pay the 15% rate of tax, you'll not that income will not be subjected to any further taxation. So if I had a capital gain of 1 million and I pay 15% of that, which is roughly 150,000, I'll not pay any other tax based on that. And in most instances, you'll find that aside from you operating a wholesale or that retail or that distribution, there are some properties that you have, either for the directors or some which you have registered for the company. So when you're doing the transfer, the other party who is purchasing, on their side, they are going to pay a tax we normally call the stamp duty. And once they pay the stamp duty, they it's also filed through the iTax system as part of an agency revenue. So when you fail to declare the capital gain tax on your side, KRA will be aware, since when the purchaser was filing the stamp duty and when they paid, they shared your details. So they shared that they are the ones who are purchasing and they have been sold from you. So on your side also, you ensure that whatever details have been declared on the stamp duty, because they'll also indicate how much are you purchasing this property. Then on the other side, those details need to tally. And sometimes you'll find that you have transferred a property within your organization. Either you are operating the wholesale or the retail or the distribution business as an individual. And the income that you have been declaring is possibly maybe like 3 million in a year or 5 million in a year. But you transfer or you purchase a land worth possibly 20 million. So KRA might also audit you because they are wondering where did you get the money to pay for this property that you purchased, which is way higher than the income that you have been getting on an annual basis. So we have talked about the net gain when you are computing the capital gain. And we have said that it's all about the gains arising from the sale of a property. So to get more information in reference to the CGT, you can check the Income Tax Act, which is also available online. So also, we had talked about the VAT withholding, but aside from the VAT withholding, we have the withholding tax. That is the income tax withholding. So this is the withholding that is deducted at source on maybe professional services, management fees. So there are those services whereby, so for example, in your organization, when you engage a lawyer, you have engaged a professional. So the moment you pay them 100,000, you're supposed to deduct 5% of that amount and remit it to KRA. So once you do that, then even when your audit is being conducted, you'll be at ease to claim legal fees worth 100,000 or any amount, and you ensure that that amount has already been withheld, the 5%, and that amount has already been remitted. The reason for this is that sometimes you might pay some audit fee for the 100,000, you pay some legal fees, you pay some management fees, you pay all those fees. So when we total them, we get like that you have paid those professional services, you have engaged some professional and you have paid them professional fees worth maybe like $1 million. But on your side, you have never deducted the 5%. So when KRA are auditing your PIN, they might demand that you pay the 5% that you never withheld. And that 5% will come with some penalties and also some interest. So we ensure that in our organization, when we are paying any professional service, we ensure that we withhold the 5%, and also we ensure that we remit that money to KRA. Then also, we on top of the wholesale and the retail and the distribution, if it is the main core business, you may have some rentals that you have built. So the rentals will be charged separately because it will be a rental income. So the rental income tax, it's normally gross residential rental. So when you get you have some residential rentals and you are getting 288,000, and your amount is between 288,000 and 15 million per annum, then that income will be subjected to rental income of 7.5%. So in case you are getting like on a monthly basis, you are earning like 30,000. So you are supposed to register for the rental the monthly rental income obligation, and you ensure that you file and you pay 7.5% of that amount. And this rental income, the MRI, that is the monthly rental income, it's normally final, whereby that income will not be subjected to any further taxation. So once you pay the 7.5, that is final. And you ensure that you pay it on a monthly basis. When you fail to do that, when you fail to file the monthly rental income on a monthly basis, if you're an individual, you'll be charged a penalty of 2,000. But if you're a company, you'll be charged a penalty of 20,000. And also, when you fail to make the payment, then there's a penalty of 5% and also an interest of 1% of the tax due for every month. So in case we have these rentals and our income is more than 288,000 and below 15 million per year, we ensure that we file our monthly rental income. But this is for the residential rentals. So if it is a commercial, that is you have rented your space to another business, then that amount need to be subjected to VAT. So when you're filing your VAT for the business, that is for the wholesale and the retail and also the distribution, on top of that, you'll also declare the VAT that you are getting from the rental income, since it's a commercial property. So since you have been told that for the residential rentals and for you to file MRI, you must get an income between 288 and 15 million. So there are those whom rental income is more than 15 million. And for rental income that is above 15 million per annum, it is taxed at either individual graduated scale, whereby if it is an individual, they will use the individual graduated scale, which we say that the minimum, the first 24,000 will be taxed at 10%. We have the next 8,333 to be taxed at 15, all the way up to 35. So it will be taxed at the individual graduated scale. But if it is a company, if now the business, the rental business, it's registered in your company, then you will declare this when you're filing your audit returns, there's normally a column for the rental income. So you're going to declare the rental income that you are getting. In case of any expenses, you are going to show them and deduct them from the income. So the profit that you are going to get is the one that is going to be subjected to 30% corporation tax. And also one thing to note is that for the MRI, that is for the monthly rental income, there are no expenses which are allowable. So it means that you pay the 7.5%, which is on the total gross that you are getting. So there's no expenses that you are going to deduct. But now when you're filing for the year, then you're going to declare the income and also declare the expenses that you have incurred, either the renovations, either the security expenses that you have incurred, all those. You're going to deduct them, and the profit that you get is what you are going to pay. So far we have looked at the corporation tax, we have looked at the pay as you earn, we have looked at the VAT, the CGT, the VAT withholding, and also the income tax withholding. We have seen about the rental. So there are some of other statutories that as a wholesale and as a retail business, you need to be compliant with. So we have the NSSF, and you're going to discuss and see what rates are we supposed to pay NSSF at. So the rates of NSSF, recently they have been changing on a yearly basis. We had some other rates that were effective since from 1st February 2023 onwards up to January 2024 this year. But effective 1st February 2024, they introduced some new rates, and also possibly come next year 2025, they are also going to introduce some other new rates that are going to be effective February 2025. So for the NSSF, the lower earning threshold rose from 6,000 to 7,000. So initially, the period that is last year, the lower earning threshold was 6,000, but that has increased to 7,000. So for the NSSF, you're supposed, the rate is 6% employer and 6% employee. So as an employee, you're supposed to deduct, to be deducted 6% of the amount that you are getting, and the employer is supposed to contribute the same amount. So the employees within your organization, if you are not registered for NSSF, you should, because recently they normally go around requesting for the NSSF details. And if you are not registered, maybe you could be termed as not compliant, and hence there may be some repercussions on the same. So if you have not registered for NSSF, I think you should. And also, if you have registered for NSSF, you are supposed to ensure that you include all your employees there. So effective 1st February, we have seen that the lower earning threshold, it rose from 6,000 to 7,000. And the upper limit, effective now 1st February, is currently 36,000. So, but previously the upper limit was 8,000. So the upper limit has been doubled. So we are going to see how are these lower earning threshold computed. How do we now reach that point whereby we compute the NSSF rate that we are supposed to remit to the NSSF. So the monthly contribution for both employer and employee, they are capped at 840. So when you take the 7,000, that is the lower earning threshold. When you take 7,000 and you multiply 6%, you are going to get 420. So the employer is supposed to pay 420 and the employee is supposed to be deducted 420. And that's why we are getting that the lower earning, it has been capped at 840 for the lower earning limit. And the maximum will be 4,320 for the upper earning limit, which equally splits between the employer and the employee. So the 4,320 is 12%, including all the contribution for the employer and the whole contribution for the employee. So this is the notice that was issued to all the employers at the beginning of this year. And we have said that these are the rates that are supposed to be used effective February 2024. And they automatically updated the template. So currently, this is what we are using for the employers who are filing. So we have seen that the lower limit, that is the tier 1, is currently 7,000. And so it means that the employer, the lowest amount an employee can contribute is 420, and the lowest amount an employer can contribute is the same amount, that is 420. So it means that if you are getting 6,000, then you are going to pay the lower limit, that is, you're supposed to be deducted 420 and the employer to pay you the same 420. But if you are above the 7,000, so that amount now will be on the tier 2. So tier 2, for example, an employee who is, we have the tier 1 NSSF contribution 840. So the upper limit, it's 36,000. So an employee 6,000 to be deducted 420. And for the second tier, we are going to get the difference. So 36, we deduct by 7, we get a difference of 29,000. So for the 29,000, we are going to charge contribution by the employee will be 6% of the 29,000. And for the employer, it will be 6%, sorry, of the 29,000, which is 1,740. So once we add the total, the 3,480 for tier 2 and 840 for tier 1, that is why we are getting the maximum contribution to NSSF. Currently, it's capped at 4,320. So in case you are getting you are an employee or your employer is paying you 30,000, so it means that for the tier 1, you are going to pay the amount to be contributed to NSSF on your account will be 840. So for tier 2, we are going to get the 30,000, we subtract the 7,000, we get 21. So 21 is what we are going to subject now to the NSSF rate of 6%. So that is all for the NSSF. In case of any query, just raise it on the chat box. So now we go to the Social Health Insurance Fund, that is SHIF. But this is yet to be implemented since there's an ongoing case. So we don't know what judgment will be held by the High Court in regards to SHIF, since it had been termed as unconstitutional. So we are still awaiting for the decision. But also, they were to start, it was supposed to be launched in July 2024. That is the beginning of this month. But now they extended the launching to October, pending also the case that is ongoing. So Social Health Insurance Fund is a new health insurance program in Kenya that is designed to provide universal health coverage to all residents. So it is still under development. So as I have said, it was expected to be launched in July 2024, but now it has been extended, also pending the judgment that is being awaited for. So we can look at what are some of the differences between the Social Health Insurance Fund and the National Health Insurance Fund, that is the NHIF. So for the NHIF, currently, the contribution is between 150 to 1,700, depending on the salary. So for NSSF, we normally have the bands. So the minimum you can contribute based on your salary is 150, and the maximum you can contribute based on your salary is 1,700. Then we have the social health insurance, whereby the contribution will be on a percentage basis based on the income that you are getting. So the SHIF, it will be 2.75 based on the income that you are getting. And the maximum will be 27,500. Then on NHIF, the self-employed individuals and voluntary contributors, they normally pay 500 shillings. But now for the SHIF, that amount will reduce. So the unemployed Kenyans will pay a minimum of 300 shillings. Then on NHIF is that the employees, they receive a 15% tax relief on their NHIF contribution. So it means that as an employer or as an employee, when you're supposed to be the one filing the pay as you earn, in the pay as you earn template, there is normally a place for the insurance relief. So it means that if an employee is contributing to NHIF 1,000 shillings based on their salary, then when the pay as you earn is being computed, they are supposed to get an insurance relief of 15% of the amount they are contributing. So they'll get 15% of the 1,000. So that is roughly 150. So that 150, it will be used to reduce their taxable liability. So, but for the SHIF, the one that is being proposed, there is no tax relief, which is going to be available for SHIF contribution. But now, possibly they might introduce that this amount, the SHIF amount, to be allowable. So whereby you deduct the amount you are contributing to SHIF before you subject the balance to pay as you earn. So NHIF is covered under services for level 1 to 3, but for SHIF, the covered services is for level 1 to 6. So those are some of the main differences that we see between the SHIF and the NHIF. So we can look at some of the contribution comparison between the NHIF and SHIF. So we have seen for the NHIF, it's based on the salary that you are getting. But for SHIF, it will be a percentage of the income that you are getting. So it will be 2.75% of the income that you get. So an employee who is earning 20,000 currently, they are paying to NHIF 750. But in the new SHIF, when you get 20,000, you multiply by 2.75, you're going to get 550. So it means that for the lower earning employees, their contribution to the insurance fund will reduce. But now, as the income increases, then the contribution to SHIF will also increase. As you can see, for example, when you are earning 100,000, currently you are paying 1,700. But now, when SHIF has been fully implemented, you're going to be contributing 2,750 to SHIF. Then also you can see like for like a million, when you earn a gross pay of 1 million, currently you are paying to NHIF 1,700. But now, with the introduction of SHIF, you'll be paying 27,500. And you have seen that the maximum you can pay to SHIF is 27,500. So those are some of the comparison between NHIF and SHIF. So now we can go to the housing levy. So we proceed. So housing levy, it's basically a mandatory contribution. So it was introduced in the Finance Act 2023, and it had so many issues in the court, but now we were told it's here to stay. So it's currently being collected effective February 2024. So it is charged at a rate of 1.5% of the gross monthly salary, and the employer is supposed to contribute the same. And the deadline for filing is 9th of every month. So housing levy, they are filed together with the pay as you earn. So when you're filing your pay as you earn, there's a sheet that you fill the details of the housing levy. And KRA is the one who has been given that mandate to collect, and they are collecting it under the agency revenue. So when you're filing your pay return on a monthly basis, you need also to ensure that you pay housing levy. You deduct your employees 1.5% of the gross monthly salary, and also you match the same, you contribute the same amount. So if you have deducted them 500, you also contribute the same amount, 500. So the penalty for payment is 3% of the unpaid amount. So failure to pay the housing levy, then you will be subjected to a penalty of 3%. So it means that even for this, we need to be compliant. So for all the taxes that we have talked about and all the obligations that we have talked about, you need to ensure that you are tax compliant. So there's some updates on the affordable housing. So we have seen that the rate, so effective March 2024, the housing levy is being collected. And also we have an act, that is the Affordable Housing Act 2024, that can guide you on the same. So employers who deduct and pay the affordable housing levy, they're exempt from paying affordable housing levy on their own gross income, according to Section 5, Subsection 2 of the Affordable Housing Act 2024. So in the next slide, I have a notice that was issued by KRA on now the gross income. So it means that employers who deduct and pay the affordable housing levy, so they have the pay as you earn obligation, and they are deducting and also contributing the same amount to the affordable housing levy. They are not supposed to subject that their gross income to the Affordable Housing Act. So you are going to see in the notice that I have prepared for you. Then the affordable housing, we have seen that the due date is 9th of the following month, so filed together with the pay as you earn. We have also seen the penalty, which is 3% per month. Also, a good thing is that the iTax system has been updated to allow taxpayers to generate a payment slip for both the principal amount and penalty for affordable housing levy. So under the agency revenue in the housing levy, under housing levy, you can be able to generate a payment slip. So even though the pay as you earn is filed together with the housing levy, the generation of the payment slip is done separately. So you can say that you have filed your pay as you earn and you have generated a payment slip, and you just pay for the pay as you earn. So you need to ensure that you generate the payment slip for both obligations, that is for the pay as you earn and the for housing levy, and ensure that you pay it. So we've seen it's done separately. Also, something else to note is that the Affordable Housing Act 2024 introduced a relief. So I don't know whether those who file their returns here, the pay as you earn return, they have seen that the pay template has been improved, and it has a section in the employee detail section, that is section B. It has a place whereby you can feed the affordable housing relief. So it means that the contribution, the amount that you are being deducted, is allowable. So you have a maximum of 9,000 per month, which can be allowable, and 108,000 per year, which is allowable. So it means that when you are filing the pay as you earn return for your employees, and you have also deducted them and contributed the same for the affordable housing levy, Then ensure that when you are computing their tax payable, you allow that contribution, that employee contribution, when before now you charge before now you reach that point of getting the tax payable. So this is the notice, and it was published on 6th May 2024. And I just read as it is from paragraph 2. The Affordable Housing Act 2024 introduced affordable housing levy for all persons. So this is therefore to remind you to remit the affordable housing levy by the due date of 9th of every month, starting this month of, so it started in May 2024. So for clarity, affordable housing will be charged at the rate of 1.5% on the gross income received or accrued. So the Finance Act 2023, for the monthly rental income, previously it was 10%. But as we have seen, currently the rate is 7.5%. So they reduced from 10% to 7.5%. But now this individual who is not paying affordable housing, they do not have employees and they do not have a payee obligation, they are also supposed to pay the affordable housing. So it means that once they file their monthly rental income and they pay, they need also to generate a payment slip for the housing levy based on, so the gross rental income they get on that particular month, they charge 1.5% and they remit to KRA. Then also the gross sales receipt amount chargeable to turnover tax. So if you have a turnover tax return, so you do not have VAT return, you're not filing the VAT, you are doing the turnover tax. Previously, beginning of January 2023, the rate was 1%. The Finance Act 2023 changed the rate to 3%. But now the Affordable Housing Act 2024 changed the rate of turnover tax to 1.5. But on top of the 1.5, then you'll be required to pay the 1.5% on the affordable housing. Then any other sales before subjecting the same to VAT. So this is the statement that we are saying that employers who deduct and pay the affordable housing levy are exempt from paying affordable housing levy on their own gross income. So you can get the Affordable Housing Act 2024 and you check on section 5 subsection 2, you'll be able to see that exemption. So now we can enter the e-teams and see how it operates. So we have e-teams, which is a digital platform implemented by the Kenyan government that facilitate electronic invoicing for businesses and taxpayers to enhance tax compliance and monitoring. So technology is taking over the world. So that is why even KRA on their side, they are trying to look for ways to make sure that everything is upgraded and we embrace technology. So that is why we have this introduction of the e-teams. So starting from 1st January 2024, any business expenditure lacking proper support from a valid electronic tax invoice will not be eligible for deduction for income tax purposes. So for that, we can only be able to see after the end of 2024. That is whereby if your year is ending 31st December 2024, that is when you can file your returns. And also, that is where you'll declare the whole income that you have generated in that year and also the expenses. So you ensure that any receipt, any expenditure that you have incurring, other than maybe, for example, like the salaries and wages, you ensure that you file your pay return. If there are cash flows and they do not have any KRA pins, then you ensure that you have the necessary records, maybe their ID, you have the payment ledger, payment statements that you use. You also ensure that they do sign when you are paying them, so that you can be able to support this business expenditure at the end of the year. Also, maybe things like when you go to the market, when you are providing meals to your employees. So you go to the market, the mama mboga doesn't have an e-teams, then you can ensure that you have enough support document. So whereby instead of you doing cash payments, you can have the mobile transfer using the mobile a mobile phone, a mobile number that is registered under the company. Also, we have some other online platforms whereby you can use to pay your expenses. We have some services, some softwares like the Popote Pay. We have the Tende Pay. So you can use those to ensure that any payment that you make is done through the system and they are not cash payments, so that at least any expenditure that you are not able to get an ETIMS receipt, you can be able to sufficiently support that at the end of the year. So penalty for non-compliance with the ETIMS is 1 million. And on the ETIMS invoicing, there are some of the exemptions. And number one is the emoluments. We have the imports, investment allowances, we have interest, and air passenger ticketing. So we have various types of ETIMS solutions. We have the ETIMS Lite, that is the USSD. Maybe you can have someone who is providing services to you, and they are not ETIMS. They have not registered with ETIMS. You can just tell them just dial *222# and you generate me an ETIMS receipt so that I can be able to pay you. So the ETIMS Lite is basically a mobile phone-based solutions that allows you to issue electronic tax invoices directly from your phone. Then also we have the ETIMS Lite Web, which is basically a simplified online system for businesses with minimal transaction, especially those registered with individual PINs. We also have the ETIMS portal, which is an ETIMS solution designed for businesses in the service sector, specifically those that don't supply goods. So for example, a consultant, salon, or tour operators, it's a good fit. So the ETIMS portal, you can use any search engine, for example, Chrome. Then you just go and search ETIMS portal. So it's not installed in any device. You can use any search engine to be able to access the ETIMS portal. But this is basically for people who are in the service sector. But for your case, the wholesale and the retail, the distribution, since it involves some goods and services, then it means that the portal is not ideal for you. So what you can use if you have not registered is the ETIMS client, which is a software installed in laptops, desktops, and that is suitable for taxpayers dealing with goods and services. Then we have the online sales control unit, that is OSCU, which is a system-to-system integration solution that is ideal for taxpayers using an online invoicing system, for example, subscription-based services and online travel agencies. Then lastly, we have the virtual sales control unit, that is VSCU, which is a system-to-system integration solution that is ideal for taxpayers using both online and offline invoicing system. So depending on the type of business that you have, depending on any system that you're using within your organization, the ETIMS, they have all the solutions for you. So you will not have any reason to say that you didn't comply with the ETIMS. So tax compliance and compliance with all the rules and the regulations for you to operate your business with peace of mind is very important. So the ETIMS deadline elapsed in March 2024. So what does it mean for your business? What does it mean for your wholesale and for your distribution business? So number one, it means that you need to adhere to ETIMS protocols. You need to adhere to pre-population tax return under ETIMS. We are going to see that. You need to ensure meticulous tax record keeping. You need to ensure real-time. So the ETIMS will ensure real-time transmission of transaction data under ETIMS. Since now we have said that we are embracing technology. So it means that KRA will not wait for when you are filing your VAT, they'll not wait for you for the end of the month to know how much sales are you making. Right now, currently, up to now, 17th July 2020. Today, to right now, 17th July, is a real-time transmission of. Then also it ensures automation of VAT registration based on revenue threshold. So we talked about VAT registration. So we said there are two. We have the compulsory and the voluntary. So the compulsory is whereby you have met the 5 million threshold. So the Finance Bill 2024, it was to increase the rate, the threshold to 8 million. But since it was put on hold, then right now we are just using the previous acts that have been published. So the VAT threshold is 5 million. So using the ETIMS, since there's the real-time transmission of data, there's going to be automation of VAT registration based on revenue threshold. Once you meet the 5 million threshold, automatically you'll be registered for the VAT. There's also the validation of VAT return declaration against ETIMS data. There's also the issue of non-compliance with ETIMS, which may lead to the issue of audit activities by KRA. Then also great visibility of compliance metrics through ETIMS, which is expected to promote greater tax compliance among businesses. Then the auto-populated estimates of corporate and installment taxes. Since the KRA, even if you registered for the ETIMS last year, so it means that they already know how much sales you have made for this year, how much expenses, and maybe the estimated purchases. And using that data, they can estimate how much corporation tax can you pay for this particular year, and how much installment tax are you expected to pay. So those are some of the ways, since the deadline has elapsed, some of the benefit and some of the things that we should be aware of. So we can go to the filing of the auto-populated VAT returns in iTax. So KRA introduced a pre-filed VAT return form to simplify the filing process for VAT registered taxpayers. So it's normally known as auto-populated VAT return, and we are supposed to utilize tax information already available to the KRA. So since we are going digital, and since we have seen that through the ETIMS, there is the real-time transmission of data. So it means that at the end of the month, KRA, they are in a position to give you an auto-populated VAT return. Auto-populated meaning that they already have a record of all the sales that you have made, be it either generated, be it either exempt, be it either zero rated. They have a record of the purchases that you have made. They have a record of all the withholdings. So using that data, you are able to get an auto-populated VAT return. And for that, what you are required to do is that you are still responsible for verifying the accuracy of the information, because this is system. And sometimes system, it may not give you the accurate information, because I don't know, maybe you have encountered instances whereby you download a data, but once you check those information, you find that they do not tally with any information that you have. So you find that the system, it's somehow not accurate. It is downloading a data that relates to other taxpayers. So it's very important for you to ensure that you verify the accuracy of the information before even you submit. Then claims must be validated through ETIMS or custom import declaration for import VAT, and you ensure that you comply with the electronic tax invoicing requirement. Also, using the KRA website, they have given us, or rather they have provided us, a step-by-step guide on filling auto-populated VAT return. So you can visit their website. You'll be able to get that step-by-step guide. So the auto-populated process, it commenced on 1st March 2024. So we are now supposed to be filing our return for June. So it means that for 4 months, we have been using the auto-populated process to file our VAT. So we can look at the step-by-step guide on how we can file the auto-populated VAT return. So number one, using our PIN and password, we need to log in into the iTax portal and select the option for file returns under the return menu. So that's a screenshot of the iTax. So you go to the return, the file return. Once you click file return, it will take you to this place whereby you need to select the tax obligation, and this is VAT, and proceed to the next step of filing process. Once you do that, it will take you to the third step, whereby you need to click download button, that is download auto-populated VAT return, and then proceed to click OK to download the pre-filed form. So this is how the pre-filed form will look like. So it is basically a zipped file, and you need to open it to view the VAT return Excel templates. So if you have if you are aware or you have seen the VAT template, it has got various sections. We have section B, which is about the sales with sales, the generated sales. It also, the same section, it will give you those taxpayers who have provided you with a PIN when you are selling, and any items that you have raised and the customer never provided with a PIN, they'll also have that section whereby you'll get all those details with the total. Then it has section D. We have all those sections, section E, section F, section H, all that. So, and also the first one, we have the VAT template. So you're supposed to open the VAT template. So once you open the VAT template, then using the sheets, the CSV sheets, the Excel templates that you have been provided, now you go to the respective sheet of each. So for example, when you open to verify the entries and you make the adjustment possible, on the right, on the left, I have the sales with VAT CSV, and on the right, I have the purchases with VAT CSV. So that data, it has already been arranged as per the columns on the VAT template. So the only thing that you are required to do is to upload the VAT template. So once you view and you ensure that all the entries, you have verified them and they are correct, and you have made the adjustment necessary, then you proceed to the next section. So you're going to open the VAT template and you go to each and every section. So you can go to section B. Below there, you will get a place whereby you can import CSV. So since there's a place whereby you have saved all those CSV, you're just going to click import CSV. Then you go and select the relevant section that you want. So if it like this one, we want to upload section B, which has the PIN details. So you're going to the VAT template, click import CSV, then you go and select where you have stored the CSV, and now you'll be able to upload. So you do that for all the sheets, and once you have done that, once all the relevant CSV files have been imported into the VAT template, then you just confirm that you have captured all the details and the return has been calculated correctly with the VAT due. Then you proceed to validate the VAT returns. So the pre-filed, it means that it has not been fed into the pay template, but maybe in future we'll be able to have that. But right now, they are normally in CSV documents. So each and every sheet, you'll be able to download it as a zipped file. And then now what you are required to do is to confirm and verify the information, the sales data and the purchases. And now you come and upload into the VAT template. Once you have ensured that everything is correct, then you proceed now to what we have been doing after we feed the information. We validate the VAT template so that we can proceed and go back to the iTax so that we can be able to file. So the next step is that you proceed to upload the zip file from document folders. That is where you have saved them. You agree to the terms and you click OK button to file the return. Then download the payment receipt if any. So first of all, you're going to get an acknowledgement receipt which you are going to use to just show that you have filed your return, and it relates to the VAT and how much is the VAT payable. Then you proceed now to the registrations, the payment registration, so that you can be able to generate a payment slip, so that you use that payment slip. Either you can use the mobile money, since it has got a pay bill, or you can go to the bank, take the payment slip to the bank, and you do a bank transfer or even a check. So this is how the electronic tax invoice looks like, and it has the details of the seller. So in your organization, you should be able to use to issue an electronic tax invoice to all your customers. And if your customer has a PIN they are using, if it is a business you have sold to, then they are supposed to share their details. And that is where we'll have the buyer PIN. So once you generate the receipt for the electronic tax invoice to be valid, it will have a control unit serial number, it will have a control unit invoice number, and also it will have a QR code. And using those is whereby now you can use the iTax portal to be able to check, or rather to verify the control unit serial number, whether it is okay, or to verify the control unit invoice number. Also, you can install a scanner to be able now to scan the invoice, the electronic tax invoice once you are issued, to ensure that it is valid. Then this is a sample invoice on eTeams. So this the first one is when you're using a device that is not connected to, it's not online, like it is, it's a gadget that we are using. It's like the old ETR, so it's a portable one. But the other one, it's either the solutions that we have seen, the one for the USSD, it will give you something of this sort. The eTeams portal will also give you something of this sort. So it should also have all the details. So it's kind of an invoice. So those that are using the ones that are connected, integrated into the system, then it will have the details, the letterhead of the company and the system they are using. So the only difference is that below, or even above, there's a point whereby they'll have the QR code and the control unit serial number, the control unit invoice number. So now we can look at the key tax compliant guidelines. And number one, we need to understand that we need to have a thorough understanding of our business tax obligation. So as a wholesale and as a retail and as a distribution business, you need to understand what are your tax obligation. Do you have the pay as you earn obligation? If you do, if you have it, are you tax compliant? If you do not have it, why have you not registered for the pay as you earn obligation? So you should be able to understand well what are your business tax obligations, what are the deadlines as we have seen, so that you can ensure that you are tax compliant. Also, as a business, you ensure that you maintain accurate records. So accurate records is whereby each and every month you close your books. You have the sales record that are well kept. You have a system in place whereby you can be able to generate ledgers, that is the sales, the purchases, the general ledger. You have files whereby you have stored all the purchases. You have the expense file for like maybe the electricity, for the water, for the security, all those. Like you maintain accurate records. Then you ensure timely and accurate filing of returns. So since when you understand your business tax obligation, you'll also be able to understand what are the timelines. And also you ensure that you accurately file your returns. Then you also need to explore legitimate tax planning strategies, as we are going to see. You should also engage with tax professionals or consultants to ensure your business is fully compliant. So you can engage a tax professional to conduct a tax health check within your organization to see and check, are you fully compliant? Then regularly check the official communication from KRA to stay updated. So this communication, you'll find them in the KRA website. Also, you should ensure that your email is active. The email that you have registered on iTax is active, and it is the email that you are using, so that you can get any communication from KRA on time. Then you should also ensure that you respond promptly and accurately to KRA upon request of information. So if KRA want to conduct a review, sorry for that, if KRA wants to conduct a review for your PIN, you should ensure that you respond promptly and accurately when they request for any information. And also, if you are not able to understand, then you can be able to engage a tax professional. So let us proceed. So what are some of the importance of you being tax compliant? Because we need in all ways, in all angles, we need to be tax compliant. So number one is access to capital. Once you go to the bank, when you want to access a loan, there are a few details they will request you to provide. And one of them, they might request you to provide them with a tax compliance certificate. So if you are not tax compliant, then it will mean that you'll not be able to access a tax compliance certificate. So you'll not be able to access any capital. But if you are tax compliant, then it means automatically you'll be able to access capital. Then it improves business operation. So you'll not have any interruptions from KRA requesting you information, coming into our organization, sitting in your offices for days looking for details because you are not tax compliant. So it improves business operation. Also, it enhances growth in case of tendering and mergers. So that is very important, because when you open a small wholesale or a retail business, you are looking forward into growing it being one of the biggest wholesale business in Kenya. So and once you are tax compliant, you start being tax compliant in the initial stages, in the early stages of your business. Then also it will help you to operate with peace of mind. So you will not have any problem that I have not responded to KRA, I have meeting with KRA. You'll be operating with peace of mind. So tax planning, it assists you to have proper record keeping. You ensure that the records that you are keeping, they are proper, in that any documentation, we're going to look at some of the documentation you might be requested for. So in case currently you have not been keeping your records properly, we'll see some of the books KRA can request for. And once KRA requests for maybe documentation today, and you provide them today, so it means that within a very short time, you'll have resolved the problem, since you have all the documentation in place and they are well kept. Then accuracy when filing returns is very important to avoid any errors or mistakes, and also to avoid the amendments. Then understanding return timelines, so as you can avoid the interest and the penalties, because tax amnesty will not always be there. Then you also, it's very important as you are tax planning, you engage a professional tax expert to help you to solve any issue that might be there, and also to help you on how you can be taxed, you can plan tax accordingly. So we can look at some of the tax saving strategies when it comes to the value added tax. So number one, we have the early registration of VAT obligation, especially while constructing a commercial property by landlords. So it means that when you're, we said when you are looking at the rental income, that for commercial property, you need to have a VAT obligation. And when you purchase a cement, when you get a receipt today, that is 17th July, within 6 months, you need to have you need to have claimed that purchase so as to reduce your VAT. So if you fail to do that, then that receipt you will not be able to use it. So if you start doing a commercial, constructing a commercial property today, so anything that you purchase, any material that you purchase, and it has got VAT, once you do the early registration of VAT, it means that if the construction will take a period of 2 years, and it will have costed you 100, and that 100 million, it has maybe a VAT of like 20 million, then it means that maybe for the next 1 year or 2 years, the income that you are going to be getting, it will be offset against those credits that you already have into your system. So that will save you the paying VAT for quite some time. Then also, if one is VAT registered, you buy from other registered entity so as to enjoy the VAT input tax credit. You'll find that organization, each and every person that comes, each and every customer that comes into your premises, they request you to provide them with a VAT receipt. But now, when you're going to purchase, you go maybe to River Road, and now the person who is selling to you, they tell you that I can give you this this item at 100,000 without VAT. When I include VAT, it will be expensive. It will be 116. But because you want to buy at a lower cost, you buy at 100, and hence you have not been issued with a receipt. But now when you go to sell that item, the buyer tells you that I'm not going to purchase until you give me a VAT receipt. So for you to avoid having those huge VAT payables, you ensure that you buy from other registered entities so that you enjoy the VAT input tax credit. Then also claiming input VAT on assets. So if you have purchased maybe a furniture or you have purchased a motor vehicle, you have when you get the invoice, you'll find that you have been charged VAT. So since it is a capital item, it's an asset, ensure that you claim the input VAT that you have charged so as it can help you to reduce your VAT payable. So planning your purchases is very important, so as also to reduce the VAT payable that you are paying. So you can maybe at the end of the month, like 28th or 29th, you buy on credit. So it means that they'll give you an invoice, and since you have received an invoice, you can be able to use that invoice and claim VAT with it. So planning your purchases is very important because these purchases are the ones that are going to help you not to pay a lot of VAT. Then we have also buying on credit, goes hand in hand with you planning for your purchases. Then also issuing of KRA pins. So to avoid the assessment that are issued by KRA, it's very important that when you are purchasing something, as you go to purchase to to other businesses that are VAT registered, you ensure that you share your KRA pins, and you ensure that the details have been captured correctly in that VAT return, in that VAT electronic tax invoice, to ensure that when you are coming now to claim for that purchase, it will be easy for you. Then also proper record keeping is very important because KRA within a period of 5 years, they might come into your organization and conduct an audit. So if you do not have proper supporting documentation, because Kenya, for the VAT particularly, it's a self-assessment. So we are the ones who are mandated to assess ourselves. Even though now we have the introduction of e-teams, whereby data is already there, we are mandated to self-assess ourselves. So if you self-assess ourselves, you are going to declare the sales and the purchases. But also remember, at any period within a period of 5 years, KRA might come and tell you that I want to conduct a review on your VAT for several years. So for that, I require you to provide me with the sales details and the purchases. So if you have not properly kept the records, then you will not be able to support the purchases. And now they might disallow that purchase because you are not able to support with an invoice and also with a proof of payment. So those are some of the saving strategies when it comes to VAT. Let us look at some of the saving strategies on income tax. So interest expense on loan taken for the furtherance of the business, it's an allowable expense. So in case you take a loan, and that loan is specifically for the furtherance of the business. So interest expense that you incur, you can be able to use that to reduce your income tax at the end of the year. So when the auditor is conducting your audit, ensure that you provide them with a loan statement so that they be able to calculate how much interest have you paid for a particular year, so that they include that as an interest expense. Then bad debt expense, where they are more than 3 years old, and you are able to demonstrate proof of trying to recover with no success. So in case you sold to someone something worth $1 million, and 3 years are over and they have never paid, you have engaged lawyers, you have written emails, like you can be able to demonstrate that you have tried all the means to recover, but with no success, then that bad debt, you can be able to expense it, and it is an allowable expense, and it's going to reduce your income tax liability. Then also capital allowances. So on the other hand, you should note that for depreciation, it's not an allowable expense for tax purposes. So that's why once you compute depreciation, just for disclosure purposes, you also need to compute capital allowance. And this capital allowance, they basically include wear and tear deductions on machinery, software deductions, investment deduction, industrial building deductions, and commercial building deductions. And they range between 5 and 150% of the cost of the asset. So taxpayers should ensure that they properly claim capital allowance where applicable to reduce their tax liability, because you'll find maybe like an audit was conducted, but the person who filed for you, they did not include the capital allowance. But that capital allowance, maybe it's worth $1 million or $2 million, and it would have been used to reduce your income tax liability. So those are some of the saving strategies on income tax. We can look for the pay as you earn. So for the pay as you earn, number one, you can take an insurance cover. So yes, we have the one for NHIF, because effective 1st January 2022, NHIF is, you can also use that to claim relief on a monthly basis. But also as an employee, or you have employees within your organization, in case they have taken any insurance cover, they should provide you with those policy documents. And once you get those policy documents, when you are filing their pay, you'll use the premiums that they have paid. They'll get a relief of 15% of the premiums paid, up to a maximum of 60,000 per year. So on a monthly basis, they can be able to get an insurance relief of 5,000 per month. So that also will help to reduce their pay liability. Then also, as an employee, so as to reduce your pay as you earn, you can take a mortgage instead of a loan. So for the mortgage, you get an interest up to 25,000 per month, which is not taxable. So also in the pay template, it has got those functions whereby you can feed in the mortgage interest that you are paying. And also for that, you ensure that as an employer, you have confirmed the mortgage documents. You have all the details in such a case whereby when an audit arises from KRA, you have all the documentation to show that this mortgage interest is valid, and this particular employee is supposed to be entitled to the 25,000 per month. Then also, as an employee, you can register with a retirement benefit scheme, and contribution are tax deductible up to 20,000 per month. So for this one, we have like the NSSF, but also there are other retirement benefit schemes that we have. So as an employee, when you have those retirement benefit scheme that you have taken with any organization, then you can provide those documentation, and any contribution that you make up to a maximum of 20,000 will not be taxable. Then contribution to a registered home ownership saving plan, you get a relief of up to a maximum of 8,000 per month. Then also for people with disability, they normally get a disability relief, in that the first 150,000 per month is tax exempt. So in case in your organization you have a person with disability, or you yourself, you are a person with disability, then you should ensure that you get all the relevant documentation. You have a membership card from the organization that supports people with disability, and you ensure that you provide all those documentation to your employer, so that when they are filing the pay as you earn obligation, if you are earning 140, that will not be, you will not pay any tax in regards to that, unless now you are earning over 150. So those are some of the tax saving strategies, which I thought it was important to share with you. So we have some KRA ongoing audits. So as a wholesaler and as a retail and the distribution business, we have said that you need to understand your tax obligations. And since we have gone through the tax obligations, we have talked about on the issue of how are you supposed to be tax compliant. So, and we have also indicated that at any period within a period of 5 years, KRA might come to your organization and conduct an audit. So currently we have the ongoing audits. We have the VA or the VAT auto assessments. So these are the assessments that relate to the VAT. We have the return review. We have said that Kenya is a self-assessment. We are in a self-assessment regime. So we are the ones who are assessing ourselves. When we sell property, when it comes to the computation of CGT, we are the ones who are telling, since we are not uploading any documents, we are telling KRA that I've sold a property, I had bought it at this particular amount, this is what I have benefited, and I've paid 15% of the gain that I have done. So after that, KRA now might come and do an audit, and they want now to review that whatever return you have done, whatever VAT return, pay as you earn, the MRI, the CGT, whether it was correct and whether there was some tax evasion or some tax avoidance that was involved. Then also rental assessments, whereby you have some rentals, but you have not been paying the monthly rental income, or rather you have some commercial properties, you have not been paying VAT, and also you have not been declaring the rental income at the end of the year. Then also the VAT credits, whereby you are not declaring your VAT fully, your sales fully, but you are claiming all the purchases. So each and every time you are at a VAT credit position. So KRA will want to confirm, is this VAT credit valid? And if it is not valid, are you able to support the purchases? Are you able to support the sales? And is there any under declaration of sales, or is there an over declaration of purchases? Then also comparison between turnover in income tax return and VAT return. So KRA expects that the turnover that you are going to declare at the end of the year, it should be the same return, the same income that you have been, the total income that you have been declaring on a monthly basis for the period of 12 months. Then also advance tax. So this tax on motor vehicles, and these they will be able to get details of the motor vehicle that you own as a business from the NTSA. Then import and export information from the custom department, they will be able to get access to that. So if you are exporting and if you are importing, so if you export like in iTax, you indicate that the export sales you have done for a particular year is 100 million. But now when they get the export information, they find that you have sold double that. So that's also an issue, and that will trigger them to conduct an audit. Also, maybe you have imported something. For example, maybe the recent one we have the imported sugar worth a certain amount, but there's no income that has been declared in reference to that. So you cannot import sugar of 10 million and you don't declare any income. So they'll want to know, where did you take that sugar and why did you import it, and why is there not a corresponding income in reference to that. Also, if missed data, whereby this is the system used to for payment by the government. So you received a payment of 10 million from the government because of a tender that you provided, but now you have not declared any income in reference to that. So that also will trigger an audit. Then we have seen the rental audit based on KPLC and water meter information. So you cannot have registered meters for KPLC, like 20 of them. So that automatically will indicate that you are a landlord somewhere. So that also will trigger an audit, and they will want to know, what are these meters KPLC is used for. So what are some of the audit triggers? What triggers an audit? What triggers the KRA ongoing audit? So non-filing and late filing of returns. We say that you need to adhere to the deadlines. So when you fail to file, yet you have an obligation, then that will trigger an audit. Why are you not filing the return? Then also when you do a late filing of return, they'll want to understand why are you not filing your returns on time, particularly for the VAT, because you have a period of 20 days to ensure that you file your returns. And when they conduct the audit, and you fail also to file the return, then they can also do something called a default assessment. And the default assessment is whereby the taxpayer himself or herself has failed to file the return. Then we have seen about the IFMIS system, which is used by the government to pay its suppliers. We have the significant variation in amounts declared in returns, that is the VAT, and the pay as you earn, income tax, and VAT. So all this data need to tally. Then continuous losses by the company. As we said, the main aim of you opening a company is for you to generate some profit. So they want to understand why you opened a company 5 years ago, a wholesale company or a distribution company 5 years ago, but since then you have never declared any profit. You have always been on a loss position. So they will want to understand, is there some under declaration of sales? Is there some over declaration of expenses and even the purchases? Then also industry trends versus specific company profits. So if you're in the wholesale industry, maybe they expect a gross profit of 60%, but you have always given a gross profit of 10%. So they want to understand, why are you providing or showing a less company a gross profit margin as compared to the other companies whom you are on the same industry? Then also that party information, maybe someone provided a tip to KRA, they did some whistleblowing and they said that you have this Amanda declaration and they have all the support document to show that you have not declared your sales fully. Then there's the media attention on a company. That's also an audit trigger. Current or former employees giving out information, also the whistleblowing. Then intercompany transaction. So you have a wholesale company, and the same time you have a distribution company, and you also have a retail company. So those are interrelated intercompany transaction. So sometimes you'll find that a company will sell fictitious sales to another because they have more purchases. So even if they increase their sales, they'll not be in a payable position. But the other company whom they are related, they have more sales, but they do not have purchases. So they sell to them fictitiously so that they can reduce the payable for the other party, and they avoid paying any VAT or any corporation tax. So intercompany transactions also are audit triggers. So when you are faced with an audit, with a tax audit, what are the actions that you are supposed to do? So number one, you need to ensure that you understand the time frame that you have been given by KRA. They write to you a letter and tell you that we want to conduct an audit and we require you to provide us with the following details within a period of 14 days. So you should be able to understand how long have I been given, and so that you can be able to plan accordingly, and you ensure that within that time frame that you have been given, you provide all the necessary documentation. Then also it is important to evaluate the information required by KRA. So you don't just jump into conclusion, they need this. You need to evaluate and understand what information they require. Then you should also carry a pre-audit compliance check, that is a tax health check, to ensure that KRA will not find anything, and to ensure also that you have been tax compliant for the period they want to audit. Then also you should ensure that you have an opening meeting with the KRA teams to introduce yourself, to tell them that who the finance team or the finance manager is the one who's going to be responding to all the queries they have. So it's very important to have an opening meeting with the KRA team and also to understand the basis of them wanting to conduct an audit. Then also assign a contact person from your finance team to be the contact person. So it should not assign like accountant, the same time the finance manager is the one, then also the manager. So just assign one contact person from where KRA can request information and from where that person is the one who's going to share information to KRA. Then also ensure that you resolve as many issues as possible during the audit process. So this is to avoid issues piling up and now going now to the appeal stage. So we ensure that during this audit process, even before they conduct an assessment, we ensure that we solve as many issues as possible. Also, you ensure that you receive an official letter of findings from the KRA, since they have given you the letter that they want to conduct an audit. So after you have conducted an audit, you have communicated with them, you have provided all the details, you ensure that you get an official letter of findings. So this will help that in future, another person will not come and tell you that I want to audit the same period. You will have the letter and you'll provide to them and tell them that whatever you want to audit had already been audited by someone else from your organization. Then in case there are some taxes not in dispute, you ensure that you pay all those taxes. So how do you resolve a tax dispute? So we have started with the audit. You have ensured that you solve as many issues as possible. If you have not, then it means that you are going now into the higher stages of solving a dispute. So number one, dispute will begin at the issuance of a tax decision by KRA. So a tax decision, it can either mean an assessment. So KRA might conduct an additional assessment for any of your obligation. Maybe they conduct a VAT additional assessment, or they conduct an income tax additional assessment. So at that particular point, a dispute has risen. So once you get that additional assessment, if you are not satisfied, you're supposed to do an objection with that is KRA. They may allow that objection either getting whether they have allowed your objection in full or in part. So if you get an objection decision appeals tribunal within a period of 30 days after you receive the objection decision. Ensure that you solve. Please confirm if I'm audible and there's no network interruption. Can you be able to hear me well? Okay, thank you, Mercy. So now also, if you are not satisfied with the decision of the tax appeals tribunal, that is now when now you can proceed now to the High Court. And also, if you are not satisfied or you are dissatisfied with also the decision of the High Court, then now you can proceed now to the Court of Appeal. So that is the process of the tax dispute. And during a tax dispute, it's very important for you to engage a tax advisor. And number one, their role will be conducting periodic tax compliance check to ensure that you are tax compliance. They'll also be involved in the interpreting changes in tax to know whether does it affect your business. Then also they'll help in conducting tax risk assessment before audit. They'll also ensure that they are available during the audit process. So once you engage a tax advisor, most of the time, even you yourself, you'll not meet the audit team that is auditing you from the side of the KRA, because all the communication will be done by your tax advisor until completion. Then also they'll ensure that they successfully close the audit with fair assessment. They'll also help resolve any tax disputes that may arise on the tax audit that has been conducted. They'll also be involved in the tax planning to enhance operations. And also they'll do the tax trainings to your organization, to your finance team, and to all those departments, so that they can be able to understand their roles, and that will help your business to be tax compliant. So having a tax advisor within your organization is very important, either an internal tax advisor or an external tax advisor whom you engage from time to time. So that is the end of our training. And before I answer a few questions, we can look at some of our upcoming trainings that we are going to have. So we have an upcoming event that will be 19th July, that is Friday. It's on managing tax audits. So right now, you have already filed your returns. So this period, I know most of you will get the letters from KRA requesting, maybe it's a return review letter from KRA. They want to review your returns. Maybe they want to conduct an audit to your organization. So our director, Dr. Regina Kingori, will be training on how do you manage the tax audit. So it's still a free webinar, and you're very much welcome. It will be from 10 a.m. to 12 p.m. on Friday, 19th July. So take that into record. And it's very important for you to be in that training and for you to be able to learn. Also, we have a CSR, that is a corporate social responsibility. And it has the main sponsors are Westmill Concrete and Construction Company, which is a construction company, and now us, RWK and Associates, an audit and tax firm. So it's also a free training, and it will be training about shoe polish, shoe cream, and leather dye, and that will be next week, Saturday, that is 27th July 2024, from 10 a.m. to 1 p.m. So it's also important, if you have someone in your mind whom you would love for them to get a skill, it's important for them to attend. Then also currently, we do have an ongoing event, which is a taxation masterclass. And it started just the other day on Monday. So far we have done 2 classes, and it's going for a period of 2 weeks. And it will involve comprehensive online tax training, which are very important for you as an accountant and for you as a business owner. And it's going from 15th July to 26th July 2024. So it started on Monday, and we are going all the way up to next week, Friday, that is 26th July. We were charging 15,000 initially. Currently, we are charging 12,000. But to any one of you whom is interested, you can contact us using our number, that is 0728-897-429, and possibly we can give you a late offer. But also you'll be able to access the classes that were there on Monday, and also the classes that were there yesterday. You'll be able to get videos to those classes, and also you'll be able to get the notes for the same. So the masterclass, it helps you understand the Kenyan tax structure and regulations. It helps you to learn to calculate and manage pay as you earn, NHIF, NSSF, and Social Security contributions. So whatever we have learned today in the masterclass, it's practical. We go dig deeper into the pay template, the rental income. How do you file the rental income? How do you file the corporation tax? How do you file the VAT? All that. How do you feed the template? How do you download the auto-populated? Then also it helps you to grasp the tax implication of the rental income, the turnover tax, and the catering levy, all those tax implications for any types of tax obligation within our government. Then it will help you to master the VAT registration, the rates, and the exemptions, since we are going to go through the VAT Act and also the other acts, the Income Tax, the Tax Appeals Tribunal Act, the Tax Procedures Act, all those acts. We are going to navigate the Kenyan iTax system effectively, so you'll be able to maneuver to any section of the iTax portal. Then you are going to gain insights into tax audits, dispute resolution, and refunds. You are going to be able to discover more tax saving strategies and on how you can stay updated on new tax issues. You're going to be able to solve any tax dispute. And also for the ISPAC members, they are going to get CPD points. And also for all the members, they are going to get a certificate available showing that they have attended a taxation masterclass, a 2 weeks taxation masterclass, and the topics that they have covered. So RWK and Associates, we are an audit and a tax firm, and we have some of the various services that we offer. We have the audit services, which ranges from the statutory audit, internal audit, forensic audit, tax compliance audit, project management audit, financial statement audits. We also have the bookkeeping services that we do offer. We offer the management reports on a monthly basis, filing of monthly returns, all the returns, bank reconciliation, payroll preparation, accounts payable and receivables. We have the trial balance reconciliation, cash flow forecasting, cost management, break-even analysis, budget to actual reports. So all those are services that we offer in our bookkeeping department. Then we also have the tax services that we do offer. So we ensure the filing of all tax returns, be it either rental, be it either CGT, stamp duty, withholding tax, all those. We conduct tax health checks, which you have seen that they are important for us to know, are we tax compliant? We have also the tax refund process, tax planning. We also do the representation at KRA on different tax issues. Any issue that you might have with KRA, you're going to do the representation. We have the KRA audit process. We facilitate that process from the beginning to the end. We have the advisory on tax implication of various transactions. It is merger, if it is tendering, all that. Also, we conduct tax trainings like the one we are conducting. We have also an internal audit department whereby we offer internal audit services ranging from accounting system audit, bank reconciliation, internal control processes, management report and governance report, payroll review, procurement processes, payables and receivable reconciliation, cash flow projection, budget to actual report. So currently, right now, in the organization, you can be able to conduct a 6 months internal audit to know how are you operating for the period 1st January 2024 up to 30th June 2024. So we also have the financial consulting, which ranges from all those services that we have talked about, all those financial services that we have talked about. We also have the advisory services on processes and operation enhancement, system setup and reviews, inventory management, debt management, data and creditor management, financial management, performance management, and accounting structure. So those are some of our advisory services that we offer here at RWK and Associates. So we have 2 branches. We have one of our offices, it's at Thika branch, whereby we are located at Thika Road, opposite Mangu High School, where I'm seated today. So if in case you are around and you would like for us to offer some services, or in case you want to conduct a consultation, then, and you are located around Thika, then you can visit our office, Thika Road, opposite Mangu High School. Then also we have our Nairobi office, that is Westlands, We are located at Gate MPL 83 along Westlands Road. Also, in case you are within Westlands or Nairobi and you like a consultation or some services from us, then you can be able to visit us. So thank you so much for listening to me. So I'll take this moment, maybe we can take like 5 minutes to answer a few questions that you might have raised. So Cyrus says, please, before you finish, kindly talk about affordable housing levy relief on pay as you earn. So I don't know whether the pay template has been fully integrated, because you'll find that maybe like when you open maybe in a laptop, the affordable housing relief, you'll be able to feed it and it will be able to compute. But for others, once you download the template, you'll not be able to do that. But the affordable housing relief is it has been updated on the iTax portal and it is there. And when you're filing your pay return, you'll be able now to input the amount that has been contributed to the affordable housing levy. So Evans asked, how do you get withholding certificate issued to me from iTax? They seem to have changed the process. So yeah, currently for quite some time, for like over 1 month, we have not been able to access the withholding certificate. Where you go to reprint the withholding certificate, the only place you can view it's on the ledger. But also on the ledger now, you will not be able to know who has withheld you. So the only other way is for you to check your email, since the withholding certificates are always sent on email. So I think it's just a system update whereby maybe they are updating something, and after some time, we'll be able now to reprint the withholding certificates. So for almost over 2 months now, we have not been able to reprint the withholding certificates. So Nasibo is asking, what taxes are applicable to a school that has registered a business name using individual KRA PIN in the BRS system as opposed to getting a company PIN separately? Also, what taxes are applicable to an individual who does documentary production and video production services but is not on YouTube? She gets paid once a year and delivers the services. So the taxes that are applicable to a school that has registered a business name. So number one, the income tax. They'll pay the income tax, but it will be taxed at graduated scale rates. So education services are not VAT vatable, so do not have the VAT obligation. But for the withholding, they'll pay the income tax withholding in case they engage a professional or a trainer to come and offer them the training services. When they are paying them, they'll ensure that they withhold the 5% and the remit to KRA. Also, since I believe they have got employees, now the teachers, they should also have a pay obligation. So the taxes that are applicable to an individual who does documentary production and video production services, but is not on YouTube, she gets paid once a year and delivers the services. So the income that you get at the end of the year, you're supposed to declare it when you are filing your individual tax return for the year. And in case of any expenses that you have incurred in generating that income, also you can be able to claim that. And on the profit that you get, you'll pay the tax. If you're an individual, then you'll pay based on the graduated scale rate. So how do you tax a residential flat with a few shops on the ground floor and the rest are residential houses? So for the residential, we are told that you're supposed to pay MRI. So I think you will have two obligations. For the shops, that is a commercial one. You can you're supposed to register for the VAT since it's a commercial property, and also at the end of the year you declare that rental income, and in case of any expenses that you have incurred, you also deduct them from the income. But for the residential, you'll be required to pay the MRI, that is the monthly rental income, on a monthly basis. Affordable housing levy relief is 15% of employees' contribution, capped at 9,000 per month for residents, by the Income Tax Act for each employee. Yes, yes. What happens for a business that deals with goods and services registered on eTeams using the online platform as opposed to the eTeams Lite? Can you clarify for this? Because for those that are dealing with goods, for both goods and services, they need to have the eTeams installed in a device, either a laptop or a desktop. They cannot use the eTeams portal because eTeams portal is only for services. And now for the eTeams Lite, it's when you don't have a lot of transactions. It's for those taxpayers who don't have a lot of transactions. So if you have a lot of transactions, then I don't advise to use the eTeams Lite. So what if the shop does not meet VAT threshold? So the issue, since it's not well clarified, they only say that when you have a commercial property, you are supposed to register for VAT. So unless now we engage KRA further and we know if for the commercial property you have to meet the VAT threshold for you to register for VAT. Because in the Act, I don't think they have given us that clarification, whether you must meet the VAT, the threshold. They only say that for commercial property, you must be VAT registered. Possibly, Michael, you can contact KRA and request them to give you further clarification on the same. Joshua, apologies. Please share withholding tax of professional fee of less than 24,000 a month. Should I withhold? So the Finance Bill 2024 had said that you do withholding for any amount, but since that is not in force, if maybe for example you pay a total of 1 million for any particular year, and when we check the ledger, all those transactions, they are less than the 24,000. So for you to be safe, if you don't have a lot of those professional fees that you are paying, which are below 24,000, you can withhold. But if you have a lot of the 24,000 that you are doing, which are a lot, now totaling to like the 1 million I'm saying, then you can withhold for each and every one of them. But now relying on the previous acts that are there, you are supposed to do withholding for only payments that are above 24,000. So we can go with that unless now that changes. In that, any payment that is less than 24,000, since the law doesn't require you to withhold, and also the other party who is receiving the professional fee, they might also rely on the same law, and they'll say that the law says that you should not withhold me if you are paying me less than 24,000. Please register on the attendance so that we can be able to share the notes with you. The attendance form has been shared. So thank you so much for attending this session. Also, in case you are interested in the taxation masterclass, just raise a comment on the chat section, and we'll get in touch with you. Otherwise, have a blessed day. And also, If you are available, just attend the Managing Tax Audit webinar that will be on Friday, the same time, for you to get more information on the same. So otherwise, thank you so much for listening to me, and do have a blessed day ahead. The taxation masterclass, 7 p.m. Starting now from 15th, that was Monday, up to next week, 26th July. So in case you are interested, let us know. Grace, you can give us our details. We can get in touch with you.